Welcome guys to my YouTube channel. So today we're gonna talk about something very amazing, guys. Okay, so I hope you guys watch actually my previous video. It was a very huge video with nice content. The previous video where we talk about why supply and demand zones most often doesn't hold. So if you haven't watched that video, please guys, just do yourself good and watch that video. Okay, so in today's video we're gonna talk about something very interesting, which will be nothing else but how we can actually exploit our supply and demand zones to of good help to us in order to have good risk to reward entries. Okay, so yeah, so we just dive straight to the illustrations by what I mean by that. Okay, so let's say for instance we have gotten an established move. Let's say the price has been going lower, right? We have something like this happening in the market and then it dropped. So let's say we have seen the market being bearish, right? So we've seen break of market structure right here, and then for some certain reasons we want to trade off this supply zone right here once price starting coming back inside. So what we actually always see in the market is that what we always try to get our supply zone plotted, so it will be from this high to this low, right? So this is how most often our supply zones have been plotted, right? So now in today's video I'm gonna show you guys how you can actually exploit this supply zone into your favor in order to have good risk to reward entries, right? So in order to understand more what I mean by that, we explain in three entry criteria. These are just a few type of my entry models. Okay, so we're gonna explain what I mean by that using some of my entry models, which we shall talk about these three, right? The risk entry, the manipulation entry, and the confirm entry, right? So starting off with the risk entry. Okay, as you all know, once our supply or S&D zone or whatever demand zone is being plotted, most often what happens is that once price comes directly into that supply zone, you'll find some of you traders getting the entry right there at the entry and your stop loss right above the high or above the supply zone and targeting some certain lows, right? So that is generally what happened. But if you actually look closer, you actually realize that this supply zone can be exploited with a very nice RL and RL with the same target, but someone getting this entry as compared to someone getting either a manipulated entry or a confirmed entry who have nice risk to reward as compared to this other guy. Okay, so starting off with the risk entry, straightforward. So this will be what this risk entry will look like, right? So if for example now another trader is going with the manipulated entry, right? What I mean by manipulated entry simply is that what once there is some sort of breaks to the low and for example a break again to the high side. Okay, once you have breaks to the low and breaks to the high side, that is what I call manipulated entry. Okay, so since this is since for example here we are seeing this to be a bearish move, right? So for me, this is already manipulated right here, right? Okay, and again, if you go lower, we'll actually get the manipulated move right here. So what I generally do is, if it's a bearish move, I will always start from the lower side of the supply zone. Okay, I will check moving towards the upper side to find if there is a high which got taken out and close with body candle. Okay, so let's say in this scenario the manipulation happened right here. Okay, so me as a trader, okay, if I'm going with the manipulated entry, what I can simply do is that I can take a shot right there from the entry or from the open of that supply zone, and my stop will just be above this high that manipulated this previous high. So, and of course I will targeting some certain low right here. Let's say we have the same target. Now clearly see, right? You can clearly see that the risk to reward right here is 1:24, right? And the risk to reward right here is 1:4. So there is already a clear difference right here. So here we've gotten the risk entry, here we've gotten the manipulated entry. Okay, so do not worry guys. Okay, as the video passes by, I will give you more examples in real life chats so you get to understand more what I mean by this, how you can exploit your supply and demand zones. Okay, so now we got to talk about the confirm entry, right? So the confirm entry, of course, I've gotten so many other entry types. I think probably about 4 or 5 entry types for confirm. So confirm entry actually means is that when I see price start coming back into this S&D zone, right? The confirm might happen just before this S&D or exactly in this S&D, right? So I have some certain patterns or some certain candle formations which I want to watch or see happening in the supply zone before I can actually get an entry, right? Let's say we go for something very simple, which we all know, right? So let's go with something fractalized. Let's say we've gotten some sort of on lower time frames, we've gotten some sort of fractalized breaks, right? Let's say we have something like this. Sorry. Let's say we have something like this happening in the market right here. We have something like this. We have this low, we have this high, and the market tends to take back this low, and then we have this entry right here. So most often you will see me getting such entries like this. So I'll actually get an entry right here, and then my stop loss will just be above this high. And then because of this break right here, right? So see, it's actually because of this break right here. The break happened right here. As you can clearly see, the risk to reward is as well very nice, right? So see, we've gotten 1:4 right here. We've gotten 1:4 for this risk entry. For the manipulated entry, we've gotten 1:24, and for the confirmed entry, we've gotten 1:46. So this is how you can actually exploit your supply or S&D zone or demand zones to actually get best or better risk to rewards, right? So if you actually move now on live charts, I will explain to you further, right? So we've gotten this most recent example on the Euro USD. Okay, so price was actually moving. I actually shared this with my trading community. Okay, anyways, price actually was moving higher, right? As you can all see. So we had these breaks, towards the higher side. Okay, so what clearly meant is that what price had gotten the intentions to move higher, right? So as price actually break past this high right here, okay, it tap into this demand right here. Okay, I didn't catch this entry. Okay, so price actually move, okay, before actually coming back to break this high. It actually left behind it this demand zone right there. So that demand zone was what I was actually looking for. Okay, so if you actually use this demand zone to illustrate or to explain more further what I mean, how you can actually exploit the demand zone to get more risk to reward entries. Okay, so if we are starting straightforward with the risk entry, so what can we see right there? So we want to go to this white candle or the bearish candle. We'll plot from the high to the low, and our entry will be somewhere around here, right? If your entry is right there, and the stop loss just below it a little, and if you're targeting this high right here, as you can clearly see, the risk to reward is 2:3. Okay, 1:2.3. That is the risk to reward. Okay, 1:2.3. Okay, that is the risk to reward for this risk entry. Okay, so if you go deeper for a manipulated entry, okay, so when this happened, actually when price was right here, let me just use the playback button. Okay, nice. So price was actually right here, right? And I actually saw this demand zone as a potential one. So I wanted to see that manipulated move for me to actually get an entry. So if we went for that, let's say 45 minutes, okay, we couldn't find any manipulation happening. Okay, 30 right there. Okay, so as you can clearly see, if you start looking from this low, if you start watching from this low, right, because this is what if it's a demand, then we start looking from the low towards the upper side to find where is the manipulation, right? As you can clearly see, if you start from this low moving upward, you clearly see that what there was the most recent manipulation that happened right here. Okay, this was the most recent manipulation. If you want from this entry going downward, right, this was the most recent manipulation that happened right here. Okay, so that means that what if you are getting your entry from here, okay, it actually means that what your stop loss should be below the candle that caused manipulation. Okay, so this candle caused the manipulation right here, so your stop loss should be below this bearish candle. Okay, So if you're targeting the same high as the risk entry, what does that mean? It actually means you've generated more risk to reward. Okay, as compared to the risk entry, we have 1:2.3, and the manipulated entry we've gotten 1:5.02, right? So if you actually play the candles, play the charts, and see what happened, as you can clearly see, price didn't go below this low right here. It didn't go below this candle right here. Okay, this white candle, price didn't go below it. So we tap into it nicely, and the candle moved right nicely into our target. Okay, so that was for manipulated and the risk entry. Okay, so if you want to go more deeper for a confirmed entry, as I explained earlier, guys, for me, for my confirmed entry, I will always want to see some certain pattern forming in here just before the supply or demand zone, or inside directly the supply or demand zone. That is where I'll be looking for my confirmed entries. Okay, so as price was actually moving, let me go back. I will go back from here. Okay, so as price was actually coming into this demand zone right there, what could we see right here? If you go lower, let's say the 10 minutes, which was from the time from which I saw the formation happening. So let's play the chart and see what happened right there. Okay, so I saw this confirmation entry right here, which is one of my confirmed entries as I use. Okay, so I had the edge right there at the close of the candle, this 10 minutes bullish candle, and my stop loss was just below it, and the target was right of that same high. Okay, that is the high I targeted. Okay, so as you can clearly see, the confirmed entry gave us nice risk to reward. Okay, we had 1:8 for the confirmed entry, and if someone went lower, you get 1:5, and for the risk you get 1:2. So that is how you can actually exploit your demand or supply zones to have better risk to reward entries. Okay, so on the, I will show you more examples, by the way. On this pair, I think this pair AU, I saw something like this on the, I actually realized there was one. I hope I still have it there. Yeah, great. I have this. I had this one right here. Great. I had this example also right here. Okay. So obviously, as we all saw the move right there, this break right here already was that was already a symptom that price wanted to go higher, right? This double breaks. Anyways, so what actually happened was that one. I will cut it from here. Great. So let's start again with the risk entry, right? So before going into the risk entry, we want to actually plot our demand zone. Okay, so the demand zone will actually be what, from this low, from this high to the low, to this low. That will be the full demand zone right there. Okay, so if a trader actually is getting an entry along from that open right there, if you have a long from this open right there, and your stop loss just below the demand zone, you actually realize that your risk reward is lower. If you target that high, you will see 1:2.5, which is not bad, by the way. Okay, that is for the risk entry. Okay, so if you go with the manipulation and manipulated entry, okay, so what does that mean? We actually want to figure out, starting from here, from this higher one, right, we want to see where we had that manipulation happening in the market, right? We actually saw it happening right here, this bearish candle taking out this low right there, and a close of that candle with the body. Okay, if you check for that, you will see there was no other candle that closed below the previous with a close. There was no other candle that closed below the previous with a close. Okay, so that this was the only candle, this bearish candle right here in that demand zone, this was the only candle that closed below the previous candle with a body. Okay, so the manipulation happened right there, which means that what, it actually meant something very simple, that our stop loss should be below this white candle right here. Okay, so if we actually took our entry from the opening of that demand zone and our stop loss just below that white candle, okay, what does that mean? You actually find yourself having a very nice risk to reward, right, as compared to this other one, right? So if you have this as manipulated entry, you will find out that you have 1:3, okay, and with someone with the risk entry is having 1:2, right? So the last entry, which will be the confirm entry, okay, is for me to find a formation of a candle in here before the demand zone or in my demand zone. Okay, so if you move further, let's say anyways, let's play price and see what happened when price is in that demand zone. Okay, because the formation can happen on any time frame. Okay, the formation can happen on any time frame. Let's see. So price now is in our demand zone right there. Okay, so what does that mean? You have to monitor now and try to figure out where is that candle that forms that gives us a confirmation. Okay, so that is just part of my confirmation models. Okay, we will stick to candle formation as part of the confirmation entry. So what we could see was that what could we see? Okay, what we actually want to see, or what we're actually looking for, is a candle that will actually close. See, a candle that opens, right? A candle that opens and closes before and closes inside the previous candle. Okay, a candle that opens and closes in the formation of that candle. See, this is a candle right here, right? So it opens somewhere here and it closes right here. Okay, it closes right here. It opens here and it closes right here. Okay, which means compared to the previous candle, it has to close in between that candle. Okay, so this is the close right here. So it's actually closing before this. Okay, so of course you might argue that what if someone actually took an entry right here, because this candle actually, this blue candle actually respects the rule of my confirmation entry if price is already in my demand zone. Okay, if someone took an entry right here and the stop loss just below that candle, you would have realized that you have gotten a stop. Okay, you would have been stopped out of the trade. Okay, so with the confirmation entry, most often based on whichever formation you have been using, you might get stopped out very frequently, but the risk to reward is very high. Okay, so let's say we got stopped out at that white candle right there, and then the candle that came again was same model, which gave us a very nice entry. So the entry right there and our stop loss just below this white candle, as you can clearly see. If you went with that one, targeting the same high right there, and then if you play price, let's see what happened. As you can clearly see, price went straight into our target, right? So compare now these three risk to reward. So this is our confirm entry, 1:6. Okay, our manipulated entry 1:3, and our risk entry 1:2. So this is actually how you can exploit your S&D zones, or your supply zones, or your demand zone, whatever name you give them. This is how you can exploit these zones to have better risk to reward trades. Okay, so I hope guys this video was of great help. Okay, if you didn't understand much, try to rewatch. If you didn't still got it rightly, just drop a comment and then we shall continue over there. Okay, so by the way, if you haven't watched my previous video where we actually talked about why the supply and demand zones most often doesn't hold, please do yourself to go watch that video. Okay, so like and share this video as well. If you have gotten any topic in mind which you want to see in the upcoming videos, drop it in the comment section and then we shall see from there. Okay, so see you guys. Bye bye.